Hello viewers, this is Dr. Farooq Baloch. Today we will be learning financial management basics. Most important session for the students, professionals, business owners and entrepreneurs. First of all, we need to understand what is financial management. Financial management is about planning, organizing, directing and controlling the financial activities of an organization. Does not matter it's a small organization, it's a large organization, or you are someone who is planning to invest somewhere, you must understand the financial management so that you plan, you organize, you direct, you control your financial activities to gain better results. Financial management is important because it ensures that we use our funds optimally. This can be implemented at individual level so that we support our business growth. Whatever we are doing, we need growth in that, we need to earn more, and then ultimately maximize the firm value in which we are working or we own the firm. Objectives of the financial management are extremely simple, and those are three objectives. First is profit maximization, that is goal of every organization. Second is wealth maximization, and third is the financial stability, so that you get the profit over the time and you ensure that your business stays even when you are not around. Scope of the financial management, basically it covers three areas: investment decisions, financing decisions and dividend decisions that you need to give to your shareholders. So role of the financial manager, most of the people who are watching this, who need to learn this, are either financial manager or the finance students or the business owners. Whenever you are hiring a finance manager, you are working as a finance manager, your responsibility is financial planning, fund management and risk control. So investment decisions, investment related allocation of funds into long term and short term assets, this is done by the financial manager. Second thing is finance decision the financial manager takes is about choosing appropriate source of finance such as equity, debt and retained earnings. And the dividend decisions are the decisions that the finance manager need to make to ensure that how much profit they will distribute to the shareholder and how much to retain. And the time value of money is most important concept in the financial management. It is money today is worth more than the money in the future due to earning potential. So risk and return that they also do the financial manager is high risk is generally associated with the high potential return. And financial planning is about estimating future financial requirements and planning funds accordingly. Capital budgeting is most important stuff. Its basics are that it's a long-term investment project that you need to evaluate, and financial managers are expected to make this decision. What we mean by the working capital management? Working capital management is managing short-term assets and liabilities for smooth operations. And when we see the financial sources, mostly in the companies, the sources of business finance are either equity finance, the share of the owner, or the debt finance, or the hybrid instructions. And financial statements overview, we need to understand three most important financial uh, statements. First is income statement, second is the balance sheet, and third is the cash flow status. So cash flow is something that is probably the blood in the business organization, most important thing that the financial manager must maintain. Student must understand the basics, what we discussed, that what is their role and how financial management is important, what is financial management and what kind of decisions financial managers take. So they need to understand the finance basics and they need to ready themselves for the career. When it comes to professionals, they must work on their decision support systems, they must work on performance improvement stuff. So financial management earlier maybe was not much dependent on the data and the information, but in the age of AI where everywhere is data and we can easily interact with all the shareholders, so there are decision support systems that we see in the computer systems, that there is management information system, then decision support system. They enable the financial managers for better decision making. So the finance professionals are expected to use those decision support systems. Financial management in the digital era, most important is the fintech. Fintech companies are growing, fintech companies are over everywhere, and we see the AI driven financial analysis. Most of the financial managers are the people who manage the finance. They make three mistakes. They do the poor planning. If something is planned poorly, obviously the execution also becomes poorer, and then there is excessive debt that most the companies go, and then ignoring the cash flow. As I already told you, that one thing you need to understand if you're working in the finance is, is that the cash flow is basically the blood of an organization. The cash must come and go, and it must always be around. There must be some liquid assets that you must be selling some product. So basically companies manage the profits within the cash flows. Never ignore the cash flow. It will be the biggest mistakes of your career if you are making it as a financial manager, if you are making it as a business owner. So if we do the financial thing well, the first thing is we get the profitability, we make our organization stable, and definitely it grows. So if we can learn something, we can learn from this lecture is that finance drives the business success and decision impacting the long-term value of your finances. So we were saying that financial management is important because money today we have is it can have a future greater value because of its potential to earn more, because of its potential if wisely invested, it can multiply the growth, the capital of an organization. So this is the reason this financial management is extremely important. So if you got this lecture, so there are two questions. Let me know answer in the comment section if you understand this. That is profit maximization sufficient? What do you think? And then how does AI change the finance? The shorter answer for you, so that you do not if you can watch the video again. I already answered it, but I will tell you again that the profit maximization is not sufficient. You need some sustainable business. You need something for the long term. So mostly the poor planning, when we talk about the poor planning, the managers make the poor planning by focusing only on the profit. You need to focus on the value generation. If you are generating the value and you are constantly generating it, your customers know it, they will come again and again, and it becomes the a strong foundation of your financial management and profit maximization. So profit maximization is important, but it's not everything. It's not everything you need to focus on. How does AI change the finances? AI already changing the finances, as we discussed, that the DSS systems are there, the management information systems are there, AI driven decision making decisions are being made. There are several platforms that support the people in terms of the uh, AI related decisions. So it is already transforming, and in coming days, maybe post 2030, this will be much more important than it's important today. So I'm highly grateful to all of you. If you find this lecture useful, do share it with others, with all those people who want to understand the financial management system. So this was an overview. I will make a complete detailed video about the financial management process. There is complete course of 45 lectures about financial management, where we will learn the basic income statement, cash flow, and we will learn about the planning process, that how financial management planning should be made better for the company.